Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Friday, August 14th. So what has President Trump said today? He did cite that, emphasize that there's a big win at the U.S. Court of International Trade on one of the most despicable loopholes in American trade policy, the de minimis exception. For years, foreign shippers could send packages up to $800 into our country, duty-free, no tariff, and it became a big business for people like Temu and Shine, and certainly make things cheaper for Americans. Again, if you have to check every package, it's going to be a lot of work. So there was a reason behind it, but apparently that is gone, and that should make it a little tougher on Temu and Shine. No really other comments on anything to do with economics or foreign policy today. Bloomberg says U.S. reports readies unprecedented economic isolation plan for Iran. According to Treasury Secretary Scott Bessent, the U.S. will announce these measures soon. Watch this space for more announcements coming next week, because we are going to apply measures like have never been seen in the history of economic isolation on a country, Bessent said to an interview to Newsmax, which is an administration-friendly network. So we'll have to see. There are no details, but the Islamic Republic has weathered waves of sanctions that have failed to force it to bend its nuclear program or relinquish control over the strait. It is unclear exactly what meaningful economic measures the U.S. could implement without resorting to secondary sanctions on buyers of Iranian oil like China. Secondary sanctions, as we have talked about before, would be we sanction heavily anybody who does business with Iran, and we can do that because of the United States, the dollar's role in the international payment system. Are we going to do that? That might get, that might spark some retaliation. So we're not sure. The U.S. has added 2,200 sanctions on Tehran since 2018. And somebody said if 47 years of sanctions haven't broken Iran's will, more of the same is unlikely to produce any changes. So the market thinks that Bessent is a serious guy. So let's see what we have next week. Okay, retail sales fell by the most in more than a year. Looks like consumers pulled back on purchases of autos and online stores. The value of retail purchases not adjusted for inflation fell 0.6%, even without gasoline and autos. And gasoline had fallen by in most of July. Sales fell 0.2%. That is pretty unusual. In terms of why that might have happened, some people suggest that the tax cut that people got back may have probably in March, April, May, people have gone and already spent. So that's a one-time bump. Motor vehicles and parts dealers fell. Non-store retailers dropped 2.2%. Now, so some analysts say that the numbers could be affected because Amazon's Prime Day last year was in July, and this year they moved it to June. So we may have seen more aggressive buying of things in June because there was a discount. I, for one, certainly bought a fair amount of things that I needed on Amazon Prime Day because I got sometimes 20 to 25, sometimes 30% off. So it might have pulled forward some of the shopping from July into June. Now, even the control group, which is basically the government's calculation of goods for GDP, fell 0.4%, the most since the start of 2025. Now, on the bright side, separate card data from Bank of America and PNC said spending grew at a slower pace in July after the Prime Day event and the end of the World Cup, or close to the end of the World Cup. But consumers still appear to be in solid shape with savings above pre-pandemic levels and a growing share of households paying their credit card bills in full. So it's 1 month, nothing really to panic about. And we'll have a look at this. So month on month, down 0.6 versus a consensus of up 0.1. The control group down 0.4 versus a consensus of up 0.3. Ex autos, you can see everything was a little soft. And this is ex gas and autos because cars are a volatile sector, and then so is gasoline. You can see that pretty strong, maybe 0.5, 0.6 average here to 6 months before we have a dip here. This appears in the past. Unless I think we get multiple months of negative retail sales, which we don't get consecutively, I think this is not something we will worry about. Okay. While we're on data, Michigan consumer sentiment drops below consensus. Not really surprising given that the war had restarted or the peace deal fell apart. But 5-year inflation expectations remain at 3.3 from where it was, and 1 year is 4.3, only a tiny bit higher than where it was 4.2 last time. So not a lot to worry about. Looks like the consumer's not really that worried about inflation, at least not according to Michigan. Okay. OpenAI's annualized revenue tops $40 billion ahead of their IPO. So their annualized revenue, ARR, annual run rate, is now $40 billion based on current performance, and it's 2x what it was at the end of last year. The revenue has accelerated in recent months, driven in part by the growth of its AI coding software. Remember, Claude Code came out first, and then ChatGPT came out a bit later with it. They're getting some momentum from subscription sales and advertising business, and the consumer business continues to be pretty good. Anthropic, actually, when you want to compare it, said in May that its run rate had crossed $47 billion. Their run rate, I think, was $9 billion at the end of last year. That's how fast it grows. So $40 billion versus probably $50 billion now is probably not, they may not measure it the same way, so you probably can't compare apples to apples. Anthropic's strength is in enterprise, whereas more consumers use ChatGPT. So they said that the company, ChatGPT's, OpenAI's company, annual revenue run rate increased more than 20% month over month in July. So OpenAI has seen a sharp uptick in demand for its AI agents in recent weeks, including Codex for coding and ChatGPT work for a wider mix of tasks. They've also cut prices on certain models. Now, I use both. I use it to do research. I use it to do different things. It really helps. I think ChatGPT is actually better at answering questions, like thoughtful, long answers to questions, while Claude is better at making things for you, like visuals, like you want a chart, you want a slide. So Claude is definitely better, but Claude's token usage, which you can track at all times, is actually quite high, and I think ChatGPT's is more economical. Okay, taking a quick look, and this is from the April of 2026, how fast the annualized revenue growth, and you can see that OpenAI, always ran ahead, but Anthropic galloped ahead here, and they've certainly crossed. I think they're within $10 billion of an annual run rate of each other, but Anthropic seems to, at least for a while, have had more momentum. I wonder if ChatGPT has gotten some of that back, but really hard to tell for sure. Okay, this really important piece. Reuters reports that the AI-driven surge in bond yields could be the next risk for markets and growth. So market gauges of inflation-adjusted borrowing costs have shot to their highest in more than a decade across major economies as AI companies and governments ramp up bond sales. So U.S. 30-year yields measured by inflation-linked bonds are near 18-year highs, around 3%. These are real yields. So the yield is, maybe 5.2 or 5.3, I think it is. But if you take out inflation, we're still at around 3%. And that in terms of real yields above inflation, that's the high in almost 20 years. British and German 10-year yields are trading highest because they're borrowing a lot more money, at least Germany, for defense, which they hadn't done for decades. So the point here is, not only do you have governments borrowing a lot longer term, although we probably borrow at 5 to 7 years is the average tenor, but we certainly borrow further out. You've got government borrowing. You've got hyperscalers like Alphabet, Amazon, and Meta have issued almost $220 billion of bonds so far this year. They're going to issue more. It's more than double what it was last year. So it's probably end up being triple or even more. Now, NVIDIA's $500 billion platform with 5 huge private equity firms and Goldman Sachs suggests that there's going to be even more demand towards the longer end of the curve. So when you have so many people demanding money, the government, the hyperscalers, the NVIDIA platform, you're going to get, that's going to push yields higher, and that may prevent yields from coming down meaningfully for much longer than what people have been are thinking and what they think normally, what we've seen in the past, because there's so much demand. The Daily Feather reports that bankruptcies are up a lot and bankruptcy costs. Now, this is this is year on year. Bankruptcy lawyers are charging a lot more. They were 12%, 24 year year on year, and this year it's about 9%. You're seeing a big jump in bankruptcies. Now, does that mean that the economy is in trouble or we're getting closer to a recession? Not necessarily, because there are a number of reasons for that. The most important reason is we have much higher interest rates now than we had in 2020 through 2022. So imagine if you, right out of the pandemic, you took a 5-year loan at 4%, and now that has to be refied at 9%. Even if your business and your earnings are growing, your interest costs are up well over 100%. So can you sustain that? So that's why we're seeing more bankruptcies. Private equity, which loves leverage, has been involved in 54% of bankruptcies greater than $1 billion this year, which is, basically they took on too much leverage at low rates and couldn't refinance. Finally, this new rule on subchapter 5 made chapter 11 bankruptcies easier for small business. And for small business, bankruptcies are up 50% in a year. Previously, they just liquidated and didn't do Chapter 11. So really, this is the lagged impact of higher rates. You raise rates, there's a lag, and here's the lag. And by the way, it's also expensive to go bankrupt, which is, ironic. So let's take a look at some markets. Kospi, you know what? I haven't looked at it in a few days. Eyeing the 100-day moving average, we get back above there, and that would, I think that, certainly, I think we have seen seeing the lows of this move is what we feel like. So this is quite encouraging, and even more encouraging, it's the first up week since the highs in June, up 11.5% this week. Makes me even more confident that a low is in place. Brent, a little bit higher on this threat of economic isolation to Iran. What will it trigger Iran to do anything? A little uncertainty. I think that's why they're buying it today. Nothing particularly to worry about. This is an interesting chart. We look at this every day. Gasoline is down 7.5%. Diesel down 2.6%. I'm like, okay, the gasoline should not be down 7.4%. Peace did not just break out. But really, if you look at the specific September future, the gasoline is actually up 1.5% and diesel is flat, which makes a lot more sense. What happens is you have to be careful is this program, TradingView, will switch the front contract to the next contract once the next contract's volumes go higher than the current one. So then there's a big backwardation, which means today's contract, this month's contract, is a lot higher than next month's contract. That difference is almost 8.5%, almost 9%. So that explains why this is down 7.5. You add 1.5 to that, that's your 9%. So this is really because the market in gasoline is quite steeply backwardated. By the way, after the summer, the reason we see this is people drive a lot less after summer vacations, so gasoline demand comes down. Speaking of gasoline, up a little bit, but it's very location weighted. I just got gas today, and it's really the lowest it's been in the past 2 months, $3.85 here in the Northeast. Where the markets, the crude is slightly higher. That uncertainty is getting people to take a little bit of profit in the S&P, down 0.2%. Bonds are down, but gave back yesterday's gains. Metals are up a little bit. It should say up a little bit. I didn't change this. And then crypto is lower. Crypto is just, hasn't been doing well. Sideways, not doing a lot of damage, but not making much progress. NASDAQ, a little profit taking into the weekend. The S&P 500, technology basically giving back some of yesterday's sharp gains. Energy is up today a fair bit. So I'm like saying tech is medium well. It's basically pink with a little bit of red. Thank you for joining me this week. Have a great weekend.